Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on HDFC Bank. Our analyst maintains buy rating on HDFC Bank with a price target of Rs 2000. Quarter 2 of FY25 numbers were broadly on expected lines with strong deposit growth. Deposit growth would continue to outpace loan growth in the near term, which should bring down the LDR to normalized level. FY25 and FY26 would be the years of transition. The bank is confident of regaining its growth trajectory and NIM once this transition period is complete. We remain assertive from medium to long-term perspective. At the current market price, the stock trades at 2.2 times its FY25 and 1.9 times its FY26 core book value estimates. The stock has underperformed the broader indices in last 12 months. Next, we cover ICICI Lombard. Our analyst maintains buy rating on ICICI Lombard with a price target of Rs 2,550. Quarter 2 performance was in line. It is confident of retaining underwriting performance despite higher combined ratio at the industry level. We believe the company's healthy premium market share, along with focus on balancing growth and risk selection using data analytics to achieve profitable growth, is the right strategy. We expect ICICI Lombard to deliver an ROE of 18 to 20% over the medium term. At the current market price, the stock trades at 32.1 times its FY26 and 28.4 times its FY27 EPS estimate. The stock has outperformed the broader indices in last 12 months.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.